Hey everyone, we're here with Chris. Chris has completed his level 1 accounts successfully. Now he's trading level 2 accounts, more than one. He will tell us about it. Chris, how are you?
Pretty good. How are you?
I'm great. Chris, please tell us where you're from, how long have you been trading?
Well, I'm from Columbus, Ohio. That's Jesse in the background who's making a cameo. Um, I'm from Columbus, Ohio. I've been trading on and off for about 10 years. Um, I have taken some breaks here and there. But I actually started, actually, it was a little longer than 10 years because it was the year the financial crisis started. One of my very first trades was right in the middle of that. So it took a long time to actually see a normal market uh, in the beginning. So I would say probably realistically, I've been trading about 10 years. Those first couple of years were really rough.
Okay, so it's a whole career in trading.
Yeah.
Nice. Um, Chris, you have a very interesting process here with the fibers. You, you didn't pass your level 1 or didn't complete your level 1 account at your first attempt. You
Right.
had several attempts, and then you eventually completed successfully. Um, what did you do in order to? What do you change in your strategy, or how do you do to suddenly complete the level 1 successfully?
Well, the first thing that I would say about that is I made the mistake of getting involved in futures funded attempts. And it really kind of played havoc with my psychology because in the futures markets, in those types of funding rounds, you have to be flat by the end of the day. It's extraordinarily high leverage.
Correct.
And generally, the idea is, and this is one of the things that really attracted me to the Fivers in the first place, they have a monthly fee. So, if you're 3 weeks into it, there's a little bit of pressure to get it done. Otherwise, you're going to pay another $300 or whatever the program and the level is. So, one of the things that attracted me to the Fivers was the fact that it was one fee and then you're done.
Correct.
You can take your time, and that's huge. That's something that I cannot stress I cannot stress enough that was big. So coming from that, I think it kind of messed with my psychology a little bit. I was too worried about getting the quick profits, and it was actually very detrimental to my trading. So I would say there's a lesson in that, and that's not to try to uh, wear too many hats, as it were. It's not that I couldn't trade futures. It's just I can't trade it in that environment. If I could buy and hold, or like on a CFD account or something, completely different story. But when you're forced to be in and out every day as quick as you are in those accounts, um, you can't help but have that psychological pressure transfer onto things that you should know about. Like Forex trading. I wasn't new to Forex trading, so I had to kind of get rid of that first.
I see.
Uh, and then ultimately, I went on to realize that I wasn't holding my trades long enough, my profitable trades. I got tired of waking up in the morning and, I would say, okay, well, euro yen looks like it's going to go to such and such spot. But I get out overnight. I'm like, yeah, I don't want to sleep on that risk. And I wake up in the morning and not only had it hit my spot, but it went further. Um, so I had to get away from that as well. And there was a moment of clarity where I realized, wait a minute, these guys, they're only asking, they're giving me 6 months. And I even read somewhere that if you're close or you're profitable, you guys are known to extend it
Correct.
under the right circumstances. So I'm like, why am I breaking my neck on this? Why don't I just relax? So that was the major difference. Realized that it wasn't about getting there tomorrow. Um, and then after that, I started to apply one of the things that I did learn over there in the futures world is to when you're right, you want to be extraordinarily right. So, for example, when the euro broke 120, I knew that that was a major thing. I knew that that was something that the market had been trying to do for ages, and then all of a sudden we did it. So with my first account, I had seen it pop over 120 for an hour or two, and I threw another 10,000 lot on it. And then it rose a little further, and then another, and then another, and then another. And I started moving my stops up that, okay, well, the whole thing was like a 1% risk. It was doable. And I knew at that point in time, I wanted to not only be right, but I wanted to be extraordinarily right. Now, I don't normally trade like that. But I also did it with the other two accounts in other pairs. They just had broken major levels on a long-term chart, and at that point in time, you want to be very exposed. Uh, but that doesn't happen every day, and that's something that I think a lot of forex traders don't realize.
Correct. Okay, and once you complete it, and when you succeed on your level 1, you actually did it with another 2 accounts. So you are now managing 3 funded accounts in the 3 of them, and I want to show that. I want to show that to everyone. Let me just show that right now. So you are managing. These are your level 1 accounts. This is the first one, second one, and third one. So you're managing now 3 different accounts.
Correct.
Could you tell us why you're doing that?
Well, I mean, the most obvious and the quick answer is that I want to measure more money, or I want to manage more money. But it's a little more than that too. It's about spreading risk. So for me, the big gain, the big change was all psychology based. It wasn't structurally based. I actually am a technical analyst. That's what I do for a living. So it's not hard to figure out where the market, quote unquote, should go, but it doesn't mean that it will go there. So for me, it was about psychology. And then I realized that in this scenario, if I have 3 different accounts, if something goes horribly wrong in one of them, because I don't place the same trades in each account, then it's okay. Worst case disaster scenario in that particular process is I might go back and try to get funded in a 3rd account, but I'm going to keep the live money. It does, if you don't triple up, it does slow down your progress. But again, it's not about trying to get there overnight. I can't stress that enough. And once I got far enough away from the day trading futures, I started to see, my old habits return. So that was a big part of the process, really.
Great. Yeah, because we can see you don't mirror your trades across the accounts. You take different trades, and your process in each one has been different.
Right.
Still, you have certain patterns that are great for traders. Your risk rewards are very high in the 3 accounts, and you hold your trades for some hours. You're not trying to scalp for minutes or something. So you're really trying to take advantage of your winning trades.
Well, and then on top of that, I think unfortunately it's kind of weird when we first start talking about trading. We have this vision of pressing some buttons and making money and having this life of all the time in the world to do whatever. And then something happens when traders start actually doing it. They want to sit at the screen all the time. And quite frankly, that's no way to make a living. You're just trading a job for an obsession. So I do prefer to let them run. One of the I had a mentor many years ago, and one of the best things that he taught me was if you are not comfortable leaving the trade running and leaving the house, then you're in too big of a position, or the trade itself isn't correct and it. One of those 2 things are going on.
Right.
So that's how I try to trade. I don't want to work at this any more than I have to. I just let the market work for you.
Correct. Yeah, that's great advice. Now, I know you use different strategies in each one of your accounts, so I wouldn't ask you to to share with everyone each one of your accounts. But if you could give one piece of advice for traders who are just starting out or in their first account, what would be your advice to them?
Well, watch your position size. Without a doubt, the biggest, really when it comes to trading, it isn't that hard in and of itself. That's why so many people are successful paper trading. It's the psychology and the leverage part of it. You need to be able to let the trades do what they're going to do. And one of the best things you can do as a new trader, quite frankly, this is going to sound a little counterintuitive, but place your trade, place your stop, place your take profit, and close the platform. Walk away, come back, see what happens. Live your life, go on. When you come back and enough times you say, hey, look, I'm right more than I'm wrong. That in and of itself is a confidence building exercise. The thing about I'm currently in the midst of taking the CMT, which is a certified market technician here in the United States. And when you learn that, you learn thousands of different indicators and types of technical analysis. And at the end of the day, price is either going higher or lower. And it's really not any more difficult than that. You try to keep it as simple as possible and let the market work for you. You have to build confidence. You have to realize that when you come back, maybe you lost 1/4% or 0.5%, or maybe you're up 2%, but over time you start to see that you're more right than wrong, and you're not there fiddling with it. That's a big thing with me is watching it sometimes will get me into trouble.
Yeah, micromanaging it.
Exactly. You do not want to micromanage. It's one of the worst things you can do.
Great. So Chris, just final words, your overall experience with the 5ers, and anything else you would like to add.
Well, something that we didn't talk about is that I actually had an account a while back that I got to. It was a 40,000 account, and I got to, I want to say like 612 or something, but I had a violation in the midst of it where I had taken a position. I typed in 1.0 instead of 0.1. So I had to, what happened is they said, okay, well, then you need to make that back up. So my actual profit target was something like, I want to say 640 or something instead of 600. They basically just threw that out. And I got close. I got really close. And then the rushing it came in and I blew it up. But what was interesting was that, when I dropped that 4%, and I believe that you've changed the rules since then, but when I dropped 4% from there and got stopped out and closed out, they actually sent me the little bit of profit. It was like $100 and some or whatever. A month later, I didn't even know they were going to do that. Then I read into it and they did pay it out. So that's what kept me coming back. I was like, well, if these guys are going to pay me when I almost make it, then I definitely need to check this out. And I've had no trouble getting paid, which is the first question people ask me about these things. I find the early morning my time Zoom meetings that they have with technical analysis is always good to watch, even though I do that on a daily basis. It's interesting to see from somebody else's perspective. I find that to be very interesting, and it's interesting because there's all different levels of skill in there as well, as far as people in the crowd.
Correct.
So I highly recommend those. I think those are. It's a good thing to watch in the morning to just kind of get your head in the space and say, okay, well, Gil might be in there or whatever, saying, okay, well, the euro pound looks like it's going to do this. We're at a major support level. I'd be interested in here. But it also puts in perspective that not everything always works and you know when to get out. So especially if you're new, I would highly recommend those. I wouldn't use them as signals, but it's a good way to see how somebody who has a lot more experience is looking at the market.
Yeah, great advice. Chris, thank you for your time. I appreciate the interview and your words. And hopefully see you soon in level 3 on that account.
Yes, thanks.
So have a nice day, Chris. Bye-bye.
All right, you too. Bye.